Hello everybody, it's me the Boss Hog, and today we're going to be walking through my buys and sells over the last week for the week ending the 26th of September 2021. Let's do it. Alright, so honestly a pretty solid rebound. Obviously Monday was pretty brutal. I'm fairly sure that was shared by everybody. September in general has been quite a hard month, and again I'm pretty sure that's shared by many people. But last week I actually felt really good. A few of my underloved UK stocks in particular really supported my portfolio. The two I've decided to call out here is National Express. This is a UK listed travel company, coaches primarily, but some buses and trains as well. I just think that's a little bit misunderstood. I've mentioned them beforehand in portfolio videos. It's actually my second largest stock just because I think it's so undervalued. Yeah, it was in the news this week because there was rumours of a tie-up with a very large bus company called Stagecoach, and yeah, I think like to me, it doesn't really change anything to do with National Express's underlying business. I think it more just put it into the minds of people who'd maybe forgotten about it as a stock or was sort of running the numbers, and it went up sort of 13% in a week. So obviously that's going to be great if it's my second largest stock. The other one here is Telecom Plus, and again, probably even most UK people wouldn't have heard of this one. It's basically a combined utilities company, and in the UK at the moment, I think a lot of Europe as well. There's a bit of a gas crisis. It's very expensive, and specifically in the UK because we have a regulated cap on gas pricing. It's forcing a lot of weaker companies out of the market, basically. And Telecom Plus is a unified utility company and is benefiting from this, or the perception is that it will be one of the winners. It's a really well-run company. It's not got too much debt. It's profitable, and it's seen as one of the likely winners. A lot of these a lot of consumers who have just lost their gas supply because they've hit the wall are now going to be passed on to other companies, and Telecom Plus is likely to be one of the winners. So this is both of these companies feel really good for me, just because I back them quite heavily. Like I say, National Express my second largest holding. Telecom Plus is it's not a massive holding, but it's still 3% of my portfolio. And the reason why I really feel good about this one is because I work in utilities myself. I feel fairly comfortable pricing utility companies, and I just think this one's really undervalued. Even after it's run up, I still think it's a good 15% undervalued and supported by a 4% yield as well. So for me, it felt really good this week. Actually, I'm not going to lie. But yeah, as well as that. I'm pretty happy with the movements I made over last week. I did manage to trade about 5% of my portfolio in a week, so still a fairly active week actually. Nothing like last week where I was more like 15%, but still it was pretty aggressive. And I also made some changes as well that I'm going to talk about in a little while, just in terms of my portfolio structure for the future and so on. I ramped back up the capital contribution to £800 a week. That's what I've been doing for a while now, but one of my investment accounts filled up, so I couldn't put any more in. Basically, my wife was away and she's got all the banking passwords, so I couldn't really do anything to change anything, set it up. Anyway, we're now back to £800. £400 went into an ISA and £400 went into a standard investment account. That also touches on the following point as well about some portfolio management. And just the one dividend this week, but a pretty solid one, honestly, 50 quid from a very well-run general insurer in the UK, Legal in General. And because it was in my personal ISA, it all went into a Lockheed Martin, which I'm quite happy with. Down a couple of percent on it, but obviously they had a pretty good announcement and buyback, etc. So yeah, like I say, broadly speaking, super happy. Monday was pretty brutal, but by Wednesday it had already recovered. And then the rest of the week I was able to just ride out with a pretty good performance, I think. So yeah. All right. So that aside, let's have a look at what I've been buying and selling this week. All right, so I'm going to start with HBAN, is Huntington Bank shares. My largest buy this week, although it's slightly mixed because I was also selling some of them, as you'll see in a second. I did previously have 600 shares of this, but sold down 500 of them just to buy elsewhere, effectively. I still like this company. I think it's worth about $17.20 a share, and I'd buy under $15, basically. I think that's a sufficient safety margin. Again, a pretty good yield for an American company at over 4%, and I just think it's a well-run company that have now gone through the main part of their very large acquisition. So I like it, and I moved this over to my wife's ISA, which I'm still contributing capital to, and is generally more green, slightly less risky, and has a slightly different capital addition profile to it. So yeah, I still like it as a company, and went fairly hard into it during the week. Polymetal here, this is my main gold hedge, which I now do have up to 5% of my portfolio, which is my long-term target. I like poly a lot, to be honest. It's gold and silver. Now, in fairness with you, both of those commodities have been a bit underloved for a little while. However, I think poly is slightly oversold. It's falling faster than the commodity prices, and it's supported by a 7.5% yield at the moment. I had a look at their production costs as well as their other costs as well in their last financial update. They've still got quite a lot of room, so I don't have any real doubts for the yield and the underlying stability of the business. So for me, it's just a chance to average down, and I definitely am averaging down at the moment. I'm down sort of nearly 10%, so it does look pretty red. But again, I'm happy with this as a hedge, and it's I think a solid long-term holding as well. So no major issues with that. Bristol Myers, again, Bristol Myers always seems to be around this price point, but for me, I think I was thinking it was undervalued at like 65, so anything sort of approaching 60 for me is a good buying opportunity. I think I'm now up to 150 shares, so I'm pretty happy with that, or increasingly happy with that. I might add a little bit, but yeah, I'm now happy with the size of my BMY shares. And I think I'm averaged at just over $61, so sitting on a very small loss at the moment, but again, supported by about 3.4% yield, I think, at current pricing, and I'm fine with that. Khaki, although they do talk to themselves as CACI, but I just find it easy to say Khaki. This is, again, an IT/defense type company. I really like it. It keeps winning, tens of millions of contracts, and it's a very well-run, growing company. So I like this as well. I've talked about them before. And last but not least is Games Workshop. I did previously have these as one of my larger shares or larger holdings. Had 25 shares, but I sold out around £118, and I've decided to move these outside of my ISA into an invest account. The main reason for that is because they're more of a growth company than a dividend one. And yeah, for me, I think this share is probably about 122 in terms of fair value. Definitely buying anything under about 110 is an easy buy for me. To be honest with you, anything under even 115 is still a good price for me. So that's the plan with Games Workshop. I think it's a really well-run company. And the margins are just really impressive. And there's a lot of IP-related stuff coming through as well, so I'm actually quite excited about them. But decided to profit take a few weeks ago, effectively, because it was near fair value and a lot of other holdings weren't, so averaged down over there. But I like the company enough that I picked up 3 shares in an investment account, so that was the plan there. All right, and then shares I sold next. All right, so first up in terms of sales is Amazon. I did have 2 shares in Amazon not too long ago, but I've basically been selling down my position between about 5 and a 10% profit. So that's fine. Most of the reason for me doing this is just to free up some money to put it into shares I think are more undervalued. So that's BMY, Khaki, and HBAN as well, which is a new position in my wife's ISA. Also as well, and I keep on touching on it, so I should probably explain in a bit more detail. In the UK, for anyone who's not aware, we have ISAs, individual savings accounts. They're very generous, tax efficient accounts. You can put 20 grand a year into each one, and because I'm overseeing my wife's investments as well, that's basically 40 grand total. This year though, we're going to be able to exceed that in terms of our investment contribution, so I started to give it some thought as to what an investment outside of those ISAs looks like. And for me, because of a combination of my wife and my current tax, keen to avoid sort of future taxes as well outside of ISAs, and also the potential need to kind of get access to the shares that will be held outside of the ISAs, I've decided to go for fundamentally sort of safe, good growth, either no or low yielding shares, and have those kind of shares outside of the ISAs. So that includes things like Amazon as well as Games Workshop, thinking of Danaher as well, which is not very well known, but a nifty little US tech company. Then things like Microsoft, Apple, those kind of things as well, just to kind of keep that split. So this is kind of part of my portfolio management. If anyone would like a video to explain it in a bit more detail, let me know and I'll put some time into it. Otherwise, we'll go for that for now, and I'll probably explain it in my month-end portfolio videos as well. But for now, that's part of the rationale anyway. And honestly, I'm happy with that. I'm happy with the direction of things are going. So Huntington here again, this is also on this list. These last 100 are from my previous 600. This is in my personal ISA, and really that was just some profit taking. It was around sort of 15.50 when I was selling those shares, so that was pretty good as it's sort of a recent high. I still like H-band, as I've already said, so it's really just was a plan to free up some capital into an ISA which is already filled up, so I can't put any more cash into it to average down. And yeah, more portfolio jigging and etc. So part of the plan there. And last but not least, I felt like I should address this because even though it's not huge movement, although it is the better part of 1,000, I kind of ended up swing trading WH Smith. It's a company I've owned before and again traded profitably. It's a very well-run retail company, probably known better to Brits than Americans, but it does have business out there as well. And for me, I just think WH Smith is obviously impacted by COVID, especially its earnings side, because all of its higher margin stuff is in airports and train stations and etc. But it's still a good business. It's still making money, and you know it fell back under 15 quid, which I was more than happy to buy it at. I was selling here for the better part of 17 quid, so you know it was. I did average up a little bit under 15.50, but yeah, I still made like 13% profit in 2 weeks, so that felt pretty good. And I will definitely consider picking up WH Smith under 16 quid again. It was trading at 24 quid before COVID. I still think it's a fundamentally well-run business, and if anything, it's improved over the last couple of years. So again, I get this short-term pressure. But for me, it's comfortably a £20 a share type business at the moment. So again, I'm quite tempted to get in. The only reason I sold out though was because it was in my wife's ISA, and I wanted to put some money into H-band while I was having a bit of a pullback into the sort of mid 14 ranges. So that was a chance for me to rebuild my Huntington shares where I feel really confident. So lots of kind of little movements this week, and again, part of that was some profit taking, some averaging down elsewhere, as well as some portfolio management. So hopefully that makes sense. Any questions, please put them below. Like, subscribe, and all that good stuff. Otherwise, I've been the Boss Hog. Thank you very much for watching, and good luck with your investing. Bye for now.